All right, let's jump into the dollar. All right, so we've been showing this chart for a while. This is a long-term chart of the dollar from 2020 to now, or 2025. The reason I show it to people is just so you can get the narrative straight in your head. Because I know we hear all the negative, dollar's going to zero, dollar's worthless, blah, 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 blah. All the problems in the world is because the dollar is horrible, and it's Obama's fault, it's Clinton's fault, it's Bush's fault, it's Trump's fault, everybody's fault for the dollar. The reality is, when you look at the 5-year trend, it's sideways, and this is normal for the dollar. It's the most important currency in the world. You want it stable. You want it trading in a range. Justin brought the question up earlier. Interest rates of the dollar, oil, we need them as stable as possible. So this is really what's been happening in the dollar. So yes, has it been weak the last year and a half, 2 years? Yes, absolutely. But in the big picture, it's at the bottom end of a range that's been going on for a while. So with that base, we talk about no man's land. This is what we shared last time. I now changed the chart from a 5-year to a 1-year. We had talked about in the last event that this is interesting. We had a trend line that broke, and does that end up being that this little thing right here is, in trading, sometimes we call it a red dog reversal, or it's an undercut. And what happens sometimes is you get this undercut and everybody gets super negative. And when this undercut happened, notice this bottom right here is right about the same time gold topped out. So if I were to take a gold chart and superimpose it, you'd see gold up here and the dollar down here. So the dollar bottomed right about the same time gold peaked. We had talked about that in January. And so I've been watching to see, do we bounce back and start to get back into that trend line? Because if we got up here, I would start to think the trend of the dollar has changed from down to up. And nothing gets the dollar spunkier than war. So here's the US dollar over the last year. That trend line that I had drawn before kind of went right through here. So we're bouncing up the back end of it. So this was that undercut. And so now the big question is this becomes like the Mason-Dixon line. This is the line of delineation that we start getting sustained trade above this line in the US, in the Dixie index. Then this is a sustainable bottom. And when you look at a 5-year chart, like I showed you before, this could be a multi-year bottom. And that would have implications, because typically higher dollar also coincides with higher interest rates, a higher tenure, higher, a lot of things. So this is really important to watch, and because also that could put a crimp in the gold and silver trade. It could do a lot of things. So I'm watching this very closely, and I'm hoping by next month's event we'll have an answer. The best answer is that we come off of this and come back down towards these lows. That'd be great if you own stocks, if you own gold and silver and anything. I mean, it is coming back down this realm. Getting above it is going to cause people to have to readjust their portfolios, because I don't believe anybody was expecting dollar strength over 100 for this year or next year. It's not in their algorithms. They're starting to think about it now, I can tell you that. But so that, I think, is the biggest thing to watch. We haven't talked about the US dollar a lot the last couple of years because it's been in no man's land. But now we're starting to get into a situation that we might be coming out of no man's land, and there will be ramifications of that if your portfolio isn't designed properly for it. So, it's worked as a safe haven. I'm hoping this recent strength in the dollar is temporary. It's just the result of everybody flocking to the dollar during war. That's a normal process. That's exactly what should happen. So hopefully, when this war subsides or comes closer to an end, then maybe there's not such a demand for dollars and we start to see it drift back down. You would think usually the result of war is more debt because we spent so much money, and that ends up making the dollar weaker because then we have deficits, blah, 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 blah. So usually on the other side of war, you do get a weaker currency because we got to work through it. It's just during war, you tend to get a stronger currency if you're in the U.S. because the dollar is the place everybody goes to. When central banks have to sell their gold, they want dollars because everybody takes dollars still and will continue to do. So is the dollar weakness over? We will know soon. I hope not, because we would all do better with just the right amount of weakness. So guys, do you have any questions around that? Because we're going to talk a lot more about the dollar in future months, because I think it's going to become more important.
I got to leave at 5, so I'll leave you with this question.
Sure.
Because to me, when I look at the charts, it looks more correlated to gold in the reverse of people selling gold and the dollar's on the rise than it does war. Especially when you look at the last week, the selling of gold, it's been there and the dollar's been rising a little bit, but it's been lockstep inverse to the selling of gold then. So, I mean, you're nodding your head, so you must agree that it's more correlated to gold. So if gold starts rallying, dollar's going right back down.
It's been correlated tightly recently. I have seen times, and we had this earlier in the year where there was some dollar strength and gold still did what it did. So there will be times that negative correlation can disconnect. And that's usually when central banks are, and we kind of saw this earlier this year. We didn't know why it was happening, but apparently people kind of preparing for the war, in the sense that we had a couple months earlier this year and late last year where the dollar was strong and gold was strong. And so that tells me now, on hindsight, that during that time frame, central banks were accumulating, saving it aside. And now when the war happened, certain central banks, Turkey, Philippines, different places that are more sensitive to Iranian oil, they ended up having to sell. And that's why you see in the charts this negative correlation really tie 1-to-1, where it wasn't such a tight ratio prior. And so it can decouple again, but don't bet on it. That's not normal behavior. So that's why I really want to talk a lot about the dollar going forward, because I think if the dollar has bottomed and reversed, nobody's expecting that. And that's the kind of stuff that disrupts markets.